Hi guys, thanks for tuning in. Today I want to address something that's been making waves in the car market community, the idea of an impending car market crash. A lot of people on YouTube, especially in the car market niche, are saying car prices are inflated and they're due for a correction. But here's the truth. I just don't see that happening. I wish it would. I'd love to buy a car at a reasonable price. But when I look at the market forces at play, it's clear that a significant drop in prices isn't on the horizon. If a crash were going to happen, it likely would have already happened. Now, let me lay out four key reasons why I don't see a car market crash in 2025. Number one, high interest rates. Interest rates remain high, and federal banks have been reluctant to cut them due to persistent inflation concerns. For car buyers, this means borrowing remains expensive. Current rates at 5 to 8% for new cars and even higher for used cars make it harder for many consumers to afford vehicles. Only those who can manage those higher monthly payments are still in the market. As a result, dealers feel no pressure to lower prices because the lower rung of consumers have just completely gone. And because of this, demand for those vehicles remains strong for those who can pay. This creates a situation where prices just stay high and aren't going to come down. Now, the second reason is there's still a persistent shortage of used cars. The supply of used cars hasn't recovered to pre-pandemic levels due to disruptions during COVID. Fewer new cars sold during that time mean fewer trade-ins and fewer used cars in the market today. This shortage keeps used car prices high, often getting close to the cost of new cars. Many buyers faced with inflated used car prices, a lot of times for crappy used cars, high mileage, crappy used cars, opt to pay slightly more for a new vehicle instead. Dealers know this, and they use it to their leverage to maintain a lot of these prices. Now, the third one is going to be a little bit surprising, and I don't think a lot of people are mentioning it, but this has to do with Toyota. Toyota is one of the most in-demand brands, and it's sticking to steady pricing despite the long wait times for its vehicles. Instead of raising prices to manage demand, Toyota keeps supply limited to avoid flooding the market. This approach disrupts the balance in the car market because other brands like GM or Ford, for instance, feel no pressure to lower their prices because they know buyers unwilling to wait for Toyota will turn to them. Those buyers need a car right now. This lack of pricing flexibility across the board keeps prices high and prevents the market from correcting naturally. So Toyota, basically by not increasing their prices, they essentially help other brands keep their prices high. Now, number four, it's weird, I know, but that's just how it is. It's just this weird balance of keeping prices high for a lot of these manufacturers and just screwing over the consumers. Now, the fourth and final reason is negative equity. Negative equity is like this silent issue that keeps car prices elevated because it puts a lot of buyers out of the market. Many buyers overpaid for vehicles during the pandemic due to supply shortages. Now, because a lot of these cars went down in value because car values stabilized, a significant number of these buyers owe more on their loans than their vehicles are worth. This discourages trade-ins, further limiting the supply of used cars. Those who trade in often roll quite a bit of negative equity into the new loans, leading to higher monthly payments and reduced purchasing power. This cycle slows down the market. There's just no way around it. And it's going to keep both the new and used car prices high. Now, to sum it up, high interest rates, a used car shortage, and Toyota's pricing strategy, as well as widespread negative equity, are all factors working against us, consumers trying to get a good deal in the car market. And despite what some of these YouTubers might say, these forces keeping high prices are just simply too strong, and they're here to stay for the foreseeable future. I'd love to be proven wrong, but as it stands, I just don't see a significant drop in car prices happening anytime soon. So it's going to be very hard to get a good deal unless you spend a significant amount of time looking through the market, or unless you just go for brands like Toyota that you know keep their value, so you don't have to worry about a massive decline in the value of your vehicle. But let me know what you guys think. Let me know in the comment section below. Thanks for watching, and I'll see you in the next video.